by the end of this video, you will actually know when to buy or sell. Well, this is so important because most traders approach the charts with ideas. Well, because I watched many YouTube videos, now I know when exactly to buy or sell. And guess what happens? Most traders lose money in return. So I'm going to show you how I exactly get my trades, and I'm actually going to show you some live examples. So without any further waste of your time, we are going to dive straight into the charts. A quick one, I'm also going to show you the time frames and then where to place stop losses so you have a proper risk management plan. So let's get it on. So we are on AUDJPY, and it's the trade that I took yesterday. Now I'm actually going to first show you how I got it and why I took a sell. Now please pay close attention and look at how I generated the trade. Now first things first, we are not taking trades when there is an impulsive move. Now I can't stress this enough, but every time the market is in an impulsive move, we are not taking trades. So these points here, let me try to mark them out. So these points here, every time the market is pushing in a push phase, we are not taking any trades. Push phase, we are not taking any trades. We have to wait for corrections, or you can also call them pullbacks. Same example for a downtrend or for sales. If let's say the price is this way, this way, this way, we are not taking trades when we have an impulsive move. These points here. Now you should be wondering why. Now first things first, every time the price is an impulsive move, it's going to push with a lot of momentum and then come back for a pullback. Now more often you have made money. So an example is saying, let's say you entered your trade right around here. Okay, so let's say you entered a buy from here. That's okay, right? You're going to make some money because you have this move now. You have just this short move. Oh, I'm making money and all that. And guess what happens? Now a pullback comes through. And now this is the issue. So this is going to bring you back into a drawdown. And guess what happens? Now most traders struggle a lot with emotions. Oh, I was making money and now the trade is going against me. I think I need to close off right now. So I don't want you to fall for the same trap. So the best option, as we are going to see, is waiting for the end of pullbacks. And just a few confirmations here and there, and then you have trades. So that's the first thing that we are going to consider. Then the next thing is we need to get better stop losses, because at the end of the day, you need to have a very proper risk and money management plan. So you shouldn't enter trade and then you have to place your stop loss about 20, not necessarily pips, but with, let's say, a risk that is bigger than that reward. Doesn't make any sense. Alright, so let me take you to the charts first. Now to the style of trading, obviously I'm going to show you exactly how I get the trades. So let's go H4. H4 is a bigger time frame. From the previous video I showed you the multiple time frames analysis. So this is how we were looking initially. So I had the levels drawn out, so having this level here, and then I also had this one down here, this level down here. Now why these levels? So every time I come to charts, I'm looking at the most recent swing highs and swing lows, or the most recent key levels. So we have that, and then we also have this one on top. Now I know you should be wondering, oh, why don't you also consider this? Oh, why shouldn't you consider this? Now those are also valid. This one down here, they're also valid. But again, you shouldn't fill your charts with a lot of drawings and indicators and all that, because it's going to bring a lot of noise. So having had the two levels, and at this point I'm just considering the price action happening within this level. Hope you guys can see that very well. So now I'm just looking at what the price is doing. So we can see that the level had been respected multiple times. We have once, see, we have once, then we have the second time here, and then guess what we expected the price to bounce off, and that's what happened. Now you having seen that doesn't mean, oh, take a trade at any point. No. Now let me show you something, and that's the purpose of this video. So let's go to H1 and then I can show you something. All right, so let's say the move has started and you just came and had to put, let's say, your entry right around here. Okay, Alright, that's okay. You have gotten a very good entry, but guess what? Your stop loss is way bigger, because in any way, by the something important, when you are looking at placing stop losses, look at key levels. So you can either decide to place your stop loss either above or below a key level. Why? Because it's a level that has been respected. Meaning if it's broken, then that's okay. But more often, if it's a key level, then you are secure. Now, in such a scenario, if I entered my trade right around here, that would be okay. Well, I have a winning trade, but guess what? My stop loss is literally giving me a 1-to-1 risk to reward. So I'm not winning in any way. Okay, I've taken a winning trade, but look, if the trade went against me, then this is not okay. So you guys see that? So that's a very important thing to also understand. So having seen that this level had been respected, now I was definitely looking out for sales. So what was in my mind was, well, it's time to take sales. So at this point, we just needed to wait for what the price was going to do. We need to see the price bouncing off, because by the way, more again, it's not a must that these levels are going to be respected. If it has been respected once, twice, it's not a must that it's going to be respected. At some point you could see the price coming and breaking through and then going to the next high. So that's also important. But in this scenario, it didn't happen. Guess what happened? We saw the price coming. So the price coming to that level, formed the first top, came back down here and then formed another top, and then it was time to take the trade. Now, how am I going to take the trade? Because again, I'm not going to take the trade immediately when I see the second top. No. So more often, we are going to look out for pullbacks or retests. Why? Because these are levels where most traders are coming in. Real quick, if I can show you an example again. So right around here, most traders now for this scenario buying, most traders are going to come in here with more momentum, because most buyers are coming in. We are taking buys. So guess what? The price is going to push with a very, very impulsive move. Because I don't want us to be in a scenario, let's say you have opened up a trade and you're going to have to wait. Oh, I'm in a drawdown. Or maybe the trade is actually not even performing good as so far, you know. So it's better you get those better entries where you're going to kill it big. Because as a day trader or a scalper, then you need those impulsive moves. All right, let's go back into it and see. So right around here, I wouldn't really take a trade immediately. My entry time frame again is M15, so meaning I would have to scale to M15 and then see. So trying to consider this point after the price bouncing off this level here, we could have said, okay, well, we are looking out for sales, but how are we going to confirm? So come down to the M15. Now the M15 is the best time frame to confirm. You need to confirm on the M15 because you have that detailed look into the charts. So I would have taken a trade right around. So after, let me show you. So after seeing this pushover, we obviously saw a pullback and then with more bearish momentum. So you can see the size of the candlestick. Check this bearish candlestick, very big. You guys can see that. So it means there was a lot of bearish momentum. You guys see that? So after bouncing off this level, we came back for a slight pullback and many sellers were entering right around here. And guess what? We had this big bearish candlestick that started a very, very big downtrend. Now at this point, I wasn't watching the chart, so I would have taken a trade maybe around here, because I can see a slight pullback. So I would have taken a very good trade right around here with my stop loss just a bit above that level. Then I take profit about 1 to 2, and it would have been a good one, but I wasn't there. Now check. So I came and got a trade at this point here. Now again, there are a few things that I considered. So let me show you. So I had a trend line. So I drew this trend line here. Let me delete. Now on drawing trend lines, it should really be easy. Look at any levels that can align. As long as you have 2 or 3 levels, then draw your trend lines or any levels. So at this point, I could decide and say, well, I have this. This could have been a trend line. You see that? We have 1, 2, 3, 4 touches, 5 a retest, and then price bouncing down. Or for this scenario now, I was looking at this level here. So I drew this one right around here. Okay, awesome. You guys can see that. I can even stretch it more. Awesome. So at this point I was just looking at these touches here. So I had 1, I had 2, I had 3, many, and then finally I was waiting for this level here. So it being broken, remember anytime key levels are broken we should expect retests, okay? You can see that the price came and broke through the trend line, and guess what we saw next? We saw a retest. So a retest is the price just bouncing back to that level to show some reaction and then move even down more. So it happened, and then this is where I took my trade immediately. So I took a very beautiful sell right around here, caught it big with my stop loss just above the key level. Like I said, key levels are very good ones because it has been respected multiple times. So who are you not to respect it? Because we are just reacting to the price. So I placed my stop loss right around here and then caught it big. On M15 actually, M15 had a better look. Okay, let me see. Right, so I got my trade right around here. Then with my stop loss just above the level, and then I went for a 1 to 2 risk to reward ratio. So key points here, we were looking out for the levels. We are not taking random trades. Like I said, you're not going to take a trade on an impulsive move. That I'm going to take a trade here, no, not a good way. Look for levels where the trade is going to get straight into profit with a big impulse. So I actually shared this same trade with the Telegram community. The link is just down in the description below. Now let's go to some other trades. We can actually check any random pair, and I will show you my analysis right now, and you guys will actually follow up later on and see. So let's just choose any random pair. I'm going to close my eyes and choose any. All right, let's see that. Oof, GBP USD. All right, let's go. Whoa, this is crazy. So GBP USD, a very good bearish move. Now at this point, without any words or anything, I'm not taking any trades. No lies. Why? Because we have an impulsive move already. I'm not taking any trades at this point. You guys see that? Check this move first. So we have already witnessed a big move happening. So at this point, taking a sell is okay. Okay, fine, you have taken a sell. But like I said, more often, every time there's an impulsive move, we are going to expect a pullback. So we should expect a pullback to this level, and then we shall take our trade. Furthermore, why shouldn't you take trades here? So you can see again, our stop loss has to be above this level, meaning I would have to extend it here if I was to enter such a trade. And then guess what? There's no risk management. I'm literally risking more than what I'm making. So this doesn't work. So GBP USD, going to H4, you can just mark out the levels. Now I just saw this because the move was already on. You can clearly see it's a very good one. But at this point, using the same analysis like how I do trade, so I could just mark out the most recent levels. We can have this one here. And then we can also mark out, let me just extend this. Maybe to right around, we can consider this, we can consider this, depending on any that we choose, but that's also okay. So at this point, we expect the price to push probably up to down here, but obviously we should expect series of lower highs, lower lows. So in such a scenario, since the trade left us already, we have a big momentum push already. So we should expect our pullback up to this point here, because this is so easy. This is how it should happen. The price is going to push down, come back for a pullback, push down, come back for a pullback, and then push down, right? So that's the same thing that we should expect here. So at this point, I wouldn't take a trade, and don't take a trade, because you shouldn't fall for the same trap. Emotional confusion. Oh, I took the trade and now it's going against me. Or also a bigger stop loss, finding that your risk is bigger than your profit, then that doesn't make any sense. So I really hope you guys enjoyed this video. Most importantly, please make as much practice as possible. Any free time you have, watch the videos that I upload and then try out as many times as you can. That's how you become a better trader, and in any way we are winning. So be sure you smash that subscribe button. You can share these videos with any other person that you would really love to learn trading, and let me see you in the next video. Out. Oof, let's get them on. Let's go.